Welcome to Money on Tap. Money on Tap, your personal finance headquarters, where we bring out the professionals' experience and some fun in what we call three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. That's what we do on this show. We look at all sides of the issues, and we bring a fully independent planning perspective to the table.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. My name is Seth Crossman, and here today, Dan Micklin and Ben Brayshaw. How are you doing today?
It's been a rough and rocky one on the internet world, Seth. So I'm going to leave it at that. But I'm here.
Space pirates got you again, huh?
Well, things are good here. I'm ready to go. Tech challenges aside, let's just get into this thing.
Sounds good. Today, we've got a show for you. Tech challenges, space pirates, and rise of the ALTS. Oh, my gosh. What does that even mean or entail, right? If you're new to Money on Tap, welcome aboard. We are here for you. We're all financial planners with Brayshaw Financial Group. You know, once a week we get together and we have fun, and we bring a topic to you that we think is, you know, has some substance, has some value for you in your retirement planning, in your goals around, you know, managing assets, whatever that might look like. There's a ton inside the topic of financial planning. And we find out a lot of the time, like when we're sitting down with clients, it's a little bit like drinking from a fire hose. It can be a little overwhelming. There's a lot of stuff that can be unpacked in that planning session. And so one of the things that years ago we said, let's try to make this bite-sized fun and, you know, bring some topics for you that you can take home and work through and gain some ground on while you're not just sitting in the office with Ben or Dan or myself, and have some fun doing it. So anyways, alternatives is an asset class that not a whole lot of people grab a hold of immediately when they start talking about financial planning. But it is an asset class that has been gaining popularity. And it comes in all shapes and sizes, people. If you're familiar with what an alternative is, maybe you have experience 20 years ago or maybe longer ago in this classification of assets. And maybe it's brand new to you today and you're just fresh into the scene and looking for a little bit of experience so that you can try to grab hold of what we're talking about. Well, this is a good show for you. Pass it around the fire. And that means basically take it and make sure that your parents have it, or, you know, the people you care about have some exposure in this and understanding around this, because it does have some limitations and there's some high risk involved with some of what we're talking about today. Either way, it's going to be awesome, and we can't wait to get into it with you. But before we get going down that road too far, it is time for Money in the News.
Coming in first from Yahoo Finance, Microsoft debuts its first custom AI chip and cloud CPU. This is from Daniel Howley. And this, I think, is interesting, and, you know, particularly from an investment front, because AI is all the rage, right? We just constantly are talking about that, hearing about that. You know, it is the most frequent question I get from, you know, clients and prospects alike. You know, how do you get invested in this AI thing? And we've done a number of shows or touched on it in a number of shows that AI itself, you know, isn't really a thing, but it's a part of a technology that's being developed that can improve delivery of product. It can make computers think faster. It can make computers aim at a desired outcome that you get to set as the creator or the owner of this AI. You know, up until this point, there's been, you know, real dominance in the chip manufacturers as to where do you see the value? How do you get invested in AI? Who's making the money? And it's been in the chip space, you know, by far and large. But Microsoft, as a software company, mostly thought of that way, is dipping their toe into the waters here, and they've developed two chips. One that is about the learning end of AI, and the second that's going to be about the implementation. You know, you use one chip and one set of software to train the computer, the hardware, to think the way you want it to and aim towards the outcome you're hoping to achieve. And then the hardware itself needs this other chip to go ahead and follow those instructions and work towards your desired goal. And part of the philosophy here is, and it's been, you know, common at Apple, you know, as an example, Apple develops their own chips so that the iPads and iPhones work the way they want them to, and there's no issue around integration of product and a different manufacturer. Microsoft is touting the potential here for a 40% increased efficiency if you're using Microsoft AI chips and Microsoft hardware with Microsoft software and everything just integrated from Go. So I think that's an exciting opportunity, both from the kind of tech world perspective and the investment world.
Dan, I hear you talk about that, and I think to myself, is it Microsoft or is it Monopoly? I mean, if you integrate everything and you use all of our stuff, we'll have a tremendous opportunity for you to really, bring the future to the present. I think this is really interesting that all these companies are really developing AI at their own pace and their own levels. But it is really very interesting that Microsoft and Apple are very, very engaged in building their own proprietary software. And now they're, both building their own hardware in different stages and realms. But the competition here, and the story that a lot of our listeners need to understand, because we hear of like C3 AI as an AI company traded on the exchange, there's BBAI, there's all these different AI companies. I don't know the value of any of those things, but they're all competing for the next AI. And I do know that there's so many private investments out there in the AI space you can't even buy on the marketplace. But Microsoft and Apple are competing for a whole different space, is the way I would look at it, because we carry these phones around with us, these personal computers. I can't even remember, 25, 30 years ago, I remember getting my first cell phone, maybe it was 30 years ago. And, I remember the bag phones 35, 40 years ago, and they're all competing for the computer space that's in your pocket. And the winner of this will dominate the phone market. The winner of this will dominate every ounce of where they're going. They're fighting for dominancy in the space because the proprietary software on AI is really interesting. Google is also engaged in this space, and I know it doesn't bring it up in this article. It talks about NVIDIA and AMD and their place in there. They don't even talk about Intel. Curious where that's going to come into play. But Google has the greatest amount of data. They've already got the searching features. That there's all the code that they've written, the mass amount of data that Google possesses and that they have been archiving and managing for all these years. I can only fathom this as putting them light years ahead once they get their AI in place. That people are trying to figure out if they're going to be carrying their Google phone around forever. I mean, these major players are competing for this space pretty heavily, and it's all because of the phone system. Because I think there's 7 or 8 billion people in this world, and I think we have 6 billion of them or 5 billion of them have cell phones, and only 2 billion of them have homes. They're competing for every piece of knowledge that is in your hand, and I really think this is going to be an interesting race, and the winner is going to be very, very profitable.
Yeah, you've got a lot packed into this here. I love the vertical integration piece, and I love the 40% performance boost. I think it's interesting to see Microsoft really doing a great job, and clearly their chart, if you take a look at that, is supporting what they're doing right now in the industry. There's been some differences lately between Google and Microsoft. We've reported on that as well, kind of a divergence of those two charts. Not to say that we're not, soliciting anything here with a buy or sell on any of these companies. It's just a fascinating piece to see how Microsoft is integrating this vertical piece for the efficiency and also the cost savings for them in the AI world. Next up, in the big idea, suck it, tie-dye, content creation is Camp's new darling. I love the first line of this article. This is from The Hustle. And remember the good old days when everyone wanted to become a marine biologist? And that first line just cracked me up. I was like, oh, was that long ago that's what kids were wanting to do? Well, apparently not today. Kids have a different job title that they're going after, and that's content creator. And this is, according to a 2019 survey, 30% of kids ages 8 to 12 said their top career choice was YouTuber. And if you have kids or engaging with kids and understand what's going on out there in the world of content creation, it is the next level of rock star for the generation that's growing up. They see that there's an opportunity to make a lot of money in that. They see that they're getting a lot of eyeballs, a lot of attention, and there's a lot of hype around becoming that next content creator for our kids. Now, what's interesting is that there's camps out there that are now supporting this activity. So there's content creator camps for ages 6 to 13 that offers, subjects of YouTube and Minecraft modeling and creative IA and filmmaking. That's a Texas-based creator camp. And then there's Classroom Antics in Ohio, teaches campers 10 to 13 how to shoot, edit, and brand YouTube videos. And there's many, many more. And there's online versions as well as in-person versions. But this is a trend that alone is attracting 1.3 thousand campers to 11 locations across Texas. And they're adding 7 more. That's a lot of kids that are grabbing a hold of this, and as well as other people that are in this industry that are connecting them with how to engage in this platform. Really fascinating.
This is interesting, Seth. It's not like camp of our age where it was like, oh, I got to do archery or BB guns or whatever. It does speak to the environment. And I think for a lot of our parents, we don't realize the level of tech our kids are engaged with, and that ultimately how we can amplify those interests. Because when I was a kid playing in the woods and running around, like I wanted to take archery when I went to camp, and I wanted to do those fun things. Or I wanted to play soccer or baseball or sports. But, our kids are not engaged that way entirely anymore. And it was a whole new culture run. And the interesting side of this article is that, understanding where our culture is going, because, the tech investment piece on this, I just look at, we do things well in America. And so I think looking at the Cornell and some of the higher education places that are pouring into these organizations, I just think this is going to do a wonder for our tech offering as a country.
That's so well said, Ben, but I just have a visceral opposite reaction to this. Like, nothing brings out the cranky old man in me, like straight out of Footloose, from, just hearing about influencers and content creators. And, my kids they just want to put videos on YouTube of themselves playing with dinosaurs and Legos. And I'm like, who in the world is going to want to watch this? Like, it's just, I feel like it's such a waste. I just want to say, get a job, And the reality is I'm off base. These people are out there making money. I mean, there really is a career path here, much to my chagrin. And it just, I can't really fully get into it. But the fact of the matter is I need to move with the times, because this is happening, folks. Believe it or not, this is happening.
Well, I think too, Dan, like we look at this and we say, what value does it bring? And there's a lot of, like people make videos of just the most ridiculous things or horrible things or tragedy things, and it brings a lot of views. My wife was watching something, and she sent it to our kids, and she's like, I can't believe they even post this stuff. This is just like either the person's stupid or they're making fun of people. Like, it's just one or the other. And I said, every time you watch that, you're only encouraging more people to create more poor, bad, content that's bringing our society down. Like, this content could be really good. Like, I get on some of these things, and I was watching, like, I love watching these wood craftsmen make things. I mean, I don't know about you, but I can sit there and watch somebody make something with wood for 10 minutes and then go to the next one. Like, I could just watch that stuff. Super interesting. These people are super talented. And I actually know how to do some stuff with wood. So it's kind of, I find it somewhat valuable, because I would never be able to spend time watching a craftsman and go to his workshop and do this. But if it's for good, it can be really good. And I think that's where, hopefully a camp like this will help bring that generation into focus of really bringing value and distributing value where value is honored more so than some of the junk content. Not that your kids would make junk content, Dan. I would watch them build
it's all junk
constantly.
It's all junk, believe me.
Aren't you glad that we don't have the cringy things that we did on video so much and out there for all the world to be able to see and laugh and judge?
I would like to see yours, Seth. I mean, I wish we had yours. That would be helpful.
Oh, that's been tucked away deep into the archives, never to come out. I went back and watched some family videos recently. I was like, oh no, oh no.
Well, when I was a kid, they did the family videos. They were silent, right? So we had all these silent videos of my dad and his family and stuff, and you couldn't hear.
They were probably like black and white too, huh? You're pretty old. They were
on the old reels, on the old spool reels. My dad used to watch those things in our house all the time. But now our kids' videos, it's like, well, mostly pictures. Your mom brings out the picture album. You're like, oh, no, Mom, don't show them those pictures. Now it's like, hey, let me show you my phone. I've got every second of their life filmed. What embarrassing moment do you want to see? Because I have them all.
Megan Haney, thank you so much. Retail sales drop in October for the first time in 7 months. So Americans hit the brakes on retail spending on October as they confronted still high inflation and steep interest rates. Well, maybe not. It's interesting that the measure of how much, we spend out there, still hasn't necessarily been adjusted for inflation yet. And it doesn't include gasoline, some of the other volatile indicators out there. But it does look like there's a little bit of a slowdown here.
Yeah, I thought this is interesting. It's not in the article, but, just in the news from the last couple of days that, that month-over-month inflation number, which is, again, one of these kind of mystery metrics. You really got to sit down and study what that actually means. But it took a really significant drop, and, that led, as the dominoes fall, that dropped. The Fed sounds, it looks like there's a pause or potentially a decrease coming, and then the market soars, right? You have all these things kind of happening, and this drying up of the consumer spending is one of the indicators the Fed's been looking at. So I think if, we've had kind of the job market contract in the last month or so, we've had spending slow in the last month or so, we've inflation dropping. So I'm hoping that is going to lead to what we've all been kind of anticipating and waiting for it to come, market-wise, is that like a truly hard stop by the Fed on the increases, or potentially even that decrease. I know, Ben, you're a proponent of that's going to come closer to the election time. But, I think the conditions that they at least told us to look for are starting to appear.
They are starting to appear, but I think they're all a bunch of liars. I love, Dan, your phrase of mystery metrics. That's like, I don't even think we should call it, the Fed decision. We should just call it mystery metrics have been announced. Because when you really start breaking down everything that's going on, they've been seeing some of these indicators for a while, but they haven't really, they paused a couple times, but I really do think we're going to see, I hope I'm wrong. I hope the Fed's listening to this thing and will be like, hey, we're going to prove Ben Brayshaw wrong. I really do think we're going to see another point. I think they are going to make us bleed. When we talk about inflation, for our listeners, inflation is as much inside the things of costing, things costing more because there's just a scarcity and a demand and a need, and prices are going up and the cost of materials is going up. But these interest rates are as inflationary to our pocketbook as just straight inflation. The Fed's raising rates. They're just making everything cost more to slow the market and the economy down. That's what they're doing. And they're forcing you to have to pay more for everything. So every business, and you say, well, when I go out and buy this, I don't have to pay interest rates. Well, when you put it on a credit card, well, your rates are higher. When you go and buy it from somebody actually took a business loan to build that item or material in hopes that you're going to pay them. And so therefore they have to charge more because their loan rates are higher. There's a lot of different moving parts. And I think we don't really quantify that the Fed is contributing to this inflationary event. And no one speaks about that. No one talks about that. No one says, hey, listen, this is just costing me more. And how much of this costing more that I only define as inflation? The Fed's this innocent goat over there wandering the field, eating grass. No, they're literally in our face raising rates, causing these things to happen. They're making things more expensive. I really still feel that the decision-making of this, when China and Iran, they're lowering rates and the rest of these countries are just raising rates left and right. We needed to recover from COVID. The pent-up demand was there. We needed the market to run its course. We needed people to produce, quantities of things out there for you to buy so that they would go down because the surplus was there, not to make it scarce because it's just so expensive.
It is almost time to get into Rise of the Alts. You know what? I just want to thank you for hitting the subscribe button. If you haven't heard us on the podcast, go check us out. Just Money on Tap. And if you want to do us a solid, hit subscribe. When you do that, send us a note at info@yourmoneyontap.com or give us a call at 855-226-8551. We'd love to send you some Money on Tap gear. When we get back, it is time for Rise of the Alts. It's going to be a heck of a show here. You don't want to go anywhere. We'll be right back.
Are you ready to take control of your financial future? Look no further than Brayshaw Financial Group. Our team of experienced advisors is dedicated to helping beginners like you build wealth through smart investing strategies. Visit BrayshawFinancial.com today to start your journey toward financial independence. Brayshaw Financial Group, your partner in wealth creation.
You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. And now, more Money on Tap with Ben, Seth, and Dan.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. We are talking about rise of the alts, and it's a really fun show for us to do at Money on Tap. Alternatives it's a part of what we've been about since the beginning at Brayshaw Financial Group. Okay, so there's different kinds of investing out there. There's different kinds of classifications. If we say alternatives to you and it's something that you're fully familiar with, that's great. We're going to get into a little bit deeper dive. If you've never heard of an alternative, we're going to start from the beginning and just kind of get you caught up to speed. I'll say one of the fun things that's been a part of this conversation is the generational part of this story. There's Gen Z, there's the millennial generation that are embracing alternatives, and be it they're in different forms than we've seen historically in alternatives. And then also there's different ways that everybody can be a part of this alternative story. And if you're a part of Brayshaw Financial Group and are planning, well, you are a part of the alternative story, because that's just a part of what we manage inside of the world of our investing. And so it's going to be a lot of fun to shed some light on this for us today.
Yeah, Seth, I think that's really well said. One of the words you used that I really liked in some of the discussion we've had is a thread. You know, the thread of the alternative space has been part of who we are a little bit and a little bit and a little bit. And honestly, we've seen that grow over the years. We've had everything from, and we're going to get into this, from traded to untraded to liquid to illiquid. I mean, we've always believed in the alternative space, and maybe that's because we're a bunch of Gen Xers. I don't know. Maybe we're just right before the revolution of alternatives. But the thing about the alternative space is it just allows a greater, larger piece of diversification inside people's portfolios that no one really embraces in concept for the most part. And we have really tried to allow the diversification to have more breadth so we can experience more opportunities in spaces to potentially find, value and growth and opportunity. And that's just been something that we've all been, in alignment with, as partners here. We've all said, hey, listen, there's a place here. Let's look for the opportunity. And I think that's been common among all of us. And I think you said it well. It's a part of who we are.
Yeah, I think that's the beauty of the alternative space is the diversification. You mentioned that word, Ben, right? So, there's the whole spectrum of things that we invest in that are in the market, right? Stocks, bonds, mutual funds, all those kind of classic investment vehicles. But when something extremely turbulent hits the market, whether it's a geopolitical event or the interest rate situation we've had or a pandemic, all of those asset classes are going to essentially suffer the same fate, at least for a period of time. And the alternative space is something that gives us the opportunity to be invested, sometimes in a very similar fashion, meaning that it can trade on an exchange, but in a class of assets that is totally unaffected by what's going on in the quote unquote market world. And I think that's the beauty of it is, there's only a finite amount of money out there in the world. And when some asset classes are down, that means others are rising, right? So you want to be in a position to participate in growth wherever it's happening, and that isn't strictly limited either in the world that we invest in or in the portfolios at Brayshaw Financial in the S&P 500 as an example. There are other asset classes that take advantage of, and we help you do that.
So what are we talking about when we say, the general investing world? We're meaning cash, bonds, stocks, right? That's the typical general investing world that we all are familiar with. And when we say alternatives, there's a whole lot more in the alternatives than those three typical categories. What do you have on our list today of alternatives that we could even take a look at if we were to just kind of Google on this right now and say, well, what does an alternative investment look like?
Well, Seth, when you say that, it's funny because I've had this conversation with people when we talk about alternatives, and it's funny how some people, they jump into the conversation beforehand and start saying, "Oh, you mean this," or like this," and they're trying to guess at what we're talking about with alternatives. And the truth is that the alternative spectrum is pretty large. I mean, from everything from, like the common conversation is like gold. Like I own some gold, like, or people say, "Oh yeah, I've got a little bit of gold stashed away." That's a pretty common alternative space. But the breadth is much larger, and some of the things that we would probably all agree with is like, well, there's art. Art is an investment. It's an alternative. We can look at the different spaces, but as we really start walking around, and I say this with a little bit of a pun, people collect sneakers. I mean, my goodness gracious. I mean, what people will pay for a pair of sneakers and then walk across the road with them, I just have no idea how that even happens. We were in an airport with my daughter, and she was like, "Dad, those are the something or others." And they kind of look like those shoes. They have shoes. They're shoes with holes in them, but they're not the regular. I'm trying to remember the name of it. But anyways, she was like,
Crocs are the only thing that come to mind for me.
Right. It's like a Croc, but it's different. It looks like a Croc, but it's got a different shape and everything. She's like, "Dad, those shoes are like $2,000. And the person was wearing a pair of like, I mean, they were just, it just didn't look like they were wearing a $2,000 pair of shoes. I'm thinking to myself, well, a $2,000 watch would show, but those definitely, they were brown. I was trying to figure out why anyone would pay that.
My 8-year-old can't even tie shoes, right? Honestly, which is embarrassing enough, but he knows what Jordans look like. And he'll tell you, and if someone's walking down the street, he can pick out a pair of Jordans, which is, I mean, this whole sneaker thing is truly gotten out of control. But, you're right. It is one of these newfound alternative classes. And that's an interesting thing about alternatives is, the field of possibilities grows by the day. And that's the generational impact you're speaking to is this each generation to come finds these items that they consider to be valuable and collectible that prior generations just didn't see it that way. But there's real money to be made.
Yeah, we did we were talking one time years ago on a show about, kind of, I don't know, the NFT marketplace and some of the stuff that goes on there. And I don't even understand owning some video that everyone else can still watch. Like, I don't understand that. Like, hey, like people selling videos that you can then everyone else can still watch, but you're the owner of it. Like, I don't see value in that. Like, if I own a baseball card, it's that baseball card. It's only that one. There's lots of ones like it, but I own this one, and I'm the only one that gets to look at it when I pull it out. Like, I mean, I don't know if it's the selfish part of that baseball card conversation, but I collected baseball cards all as a kid. I was telling my son about my baseball card collection, and he was saying, "You own that card?" I was like, "Yeah, I got it in a pack of bubble gum." So, it's kind of funny when you think about what these things have done, because I remember my dad had a 1948, I think, Bowman Satchel Paige rookie card as a kid, and it was in horrible condition because he'd been flipping it his whole life as a kid. So it was, those type of things. When I think of alternatives, we talk about gold, we talk about baseball cards. I mean, we talk about all these like Hummels, like all these things that have aged and had value, but they create things today that are instantly worth lots of money according to the marketplace, and that's peculiar to me.
Yeah, there's a lot to the conversation. I mean, it just continues to go. The more that you're talking about it, I'm like, oh, I want to talk about Spencer and his baseball card story too. But I won't go there today. But there's commodities, and there's the traditional commodities, which are, your futures, your pork bellies, your you name it. There's commodities out there. Now there's investments now in farms and farmland, and that becoming a resource that's pretty hot ticket and got a lot of buzz around it. There's the digital world, those digital wallets, and what we've seen and the rise and the fall in that world. And one of the things that, as we talk about the alternative world, there's some things that we want to really be aware of. For one, there's somebody right now listening to this that I just got to tell you, you're probably really hot on an investment. It looks good. You've been out there and you've been researching it in Instagram, on YouTube, and shoot, your kid brought it to you and he's hot on it and she's hot on this thing right now. It just seems like if I don't do it today, I'm not going to get in on it. I just want to say, just take a breath. For one, hold tight. You need to hear, for one, the show, and you probably need to give us a call and actually get some perspective on it. I can't even tell you how many people come in and visit with us and we start doing the work for. When we start even mentioning alternatives, there's this, whoa. What are we talking about? 15 years ago, I've put all of my money into this thing over here and it turned into nothing.
Yeah.
Those are real estate investments that seemed like they were going to be, real estate investments in nursing home care. You name it. There's all sorts of investments out there. These are alternatives. And it has been a place that's extremely hard to really put your hands around. And also we're going to talk about, when we're talking about risk, they're very high risk.
Yeah.
They can be very high risk.
Seth, it's funny because I was just thinking, I was like, our listeners don't think of real estate as an alternative investment. Maybe some of them do, but there's all sorts of real estate out there that's just considered alternative. And it's not your home, but that's an investment, right? But alternative investments would be to diversify outside of a traditional stock bond kind of portfolio into something named real estate. And real estate is probably the one where people have either made a bunch of money or lost their shirt on it. It is one of the highest risk, most illiquid type of investments you can possibly buy. And it's one that moves and swings pretty rapidly because the whole world engages in real estate. And I think you're right, Seth. I mean, I can't tell you how many stories I've had where people come in and like, yeah, I bought this real estate thing, turned out to be nothing. Oh, I bought this real estate thing, and yeah, I lost everything. Hey, I bought this it did well, and you find out, oh, they made a lot of money, but they didn't put a lot of money into it, so it didn't really feel great. That conversation has really not been a popular one. And right now, probably the worst time to even have this conversation, because guess what? The real estate investment world is absolutely in the tanker. When you look at, traded real estate investment trusts and so forth out there that are on the market, they have just gotten hammered because guess what? Interest rates have risen. They have to pay more for interest as these loans mature. People are concerned about that. And tenancies down because people can't afford to rent places. There's all sorts of tertiary compounding things happening inside the real estate market that are making real estate, the alternative, a big question mark.
But I'm going to buy gold, right? Because I look around and all I see is everything's coming down. So I'm buying gold. And gold's never lost money, right?
I had clients buy gold and silver and so forth in heights of fear that are still underwater from buying it decades ago. And that's sad, but they don't really care because they didn't buy it for that reason. They bought it for end of the world, end of days kind of preparation scenarios. And they don't really care. They're like, well, I have it. I had it then. I have it now. And that's the security I wanted it for. And that's great. But if you're going to be buying and selling gold as a trader, like if you're going to be buying and selling baseball cards as a trader, it's really not the right thing to do, right? We buy baseball cards, we buy those types of things, and we hold on to them for 20, 30 years and get surprised that someone would pay that much money for something I got. That's the alternative space that we're familiar with. So the question is when you look at real estate and you look at the alternatives, you really have to engage a much broader, much longer time horizon. And Seth, I would challenge the conversation with anybody who's lost money in real estate, not because you can lose money in real estate, absolutely, but a lot of these illiquid real estate investment trust programs or just real estate in general is that they're really real estate makes money on huge time frames, like owning baseball cards for huge time frames, and people are trying to get in and out of these things and make a quick buck, and it kills the deal.
Well, it might sound like we're really negative on alternatives if you just started tuning in. We're talking about rise of the alternatives, and that's not true. But you're going to find out more about why we're even going to do this show and why we're even, say that alternatives are a big part of what we do here at Brayshaw Financial Group. But with that, it is one of these that we have to address. The elephant in the room and the scenarios and the cautions. And we need to make sure that we're appropriate with what we're saying here with you, because it's a very high risk conversation, and we don't want people turning around and just, running out the door and picking up whatever they think is an alternative and thinking they're going to take that to the bank. It's a big conversation for us to have, and we've got a short amount of time to do it. So we're going to take a quick break. And when we get back, we're going to get to it. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. Thanks again for the subscribe, and thanks again for letting us know so we can send you some gear at Money on Tap. We appreciate you. We'll be right back. Hey, this is Seth Kressman with Brayshaw Financial Group. Are you looking for a hassle-free way to invest? Look no further than Brayshaw Financial Group. With Brayshaw Financial Group, you can start investing with as little as $100 and enjoy a user-friendly platform with diverse ranges of investment options. Visit Brayshaw Financial Group and start your investment journey today. Brayshaw Financial Group, investing made easy.
We appreciate you listening to Money on Tap with Ben, Seth, and Dan. You can contact us at 855-226-8551 or email us at info@yourmoneyontap.com. And now, more of this week's program.
Welcome back to listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. We are talking about rise of the alts. And boy, if we didn't scare you enough on that last segment, hold on. It's about to get interesting. As a matter of fact, we're just going to start to dig into really, I think we're going to have some stories involved, some success involved in what we're talking about here for you guys, so that it's not all doom and gloom, because it certainly doesn't have to be, and it's not. It's a really exciting topic for us when we start talking about alternatives, but we do have to make sure that people are aware that today, especially today, there's so much access to information that, guess what? Information's coming and finding you too, because you probably, now that you've listened to this or heard this, you're going to pick up your phone. Next thing you're going to see is some investment that's going to be, either promising heightened returns or, super successful strategy, and all those things are, might be possible. What we really want to make sure is that, you're doing due diligence. You're not just getting the headlines, right? Headline investing is a pretty darn scary way to go. And there's enough people out there that have gone that route before us and have a tale to tell us of losing money and not having a successful experience for us to say, let's just not do that. Let's go ahead and maybe we take that opportunity to do some research. Let's get educated, but come back to the table, ask the questions that you need to ask, and start to inform yourself to start making some great, investment decisions. Become successful in this space. It's a great opportunity to be diversified. That's a big part of the story, is diversification. There's another part here too, is income. I mean, that's kind of traditionally where the alternative comes to us from, is as a kind of a lead-in for people that are looking for income outside of the bond market or outside of the equity market. And that real estate story that we were talking about, that can be a part of it. That's been packaged in an alternative investment that typically is very illiquid. Most of the time, that's what we're going to start to talk about first, is liquid and illiquid. And Dan, I actually want to just hand it off to you. You had some great stuff there to kind of feed into this.
Yeah, for people that wanted to get into this and and do that with us and have the opportunity to invest in the alternative space, but using a kind of more traditional vehicle, those opportunities exist. So specifically, we're talking about the type of alternatives that are exchange traded, right? So the benefit to the investor in that case is, it's kind of easy in, easy out, right? So it's traded on an exchange. You can make your purchase, make your investment very easily through a brokerage account and a couple other means. So it's easy to get in. Everything traded on exchange is going to be regulated to some degree. It's properly valued, and you have an easy exit strategy. Just like you hit the button to buy, you can hit the button to sell. Right. So if that investment isn't panning out for you, or for whatever reason it's no longer a comfortable space, it's easy to get your money back out of it. It might not be all your money, maybe makes money, maybe lose money, but transactionally speaking, it's considered liquid. Right. You can trade it in the same fashion that you would trade, a stock or a bond or anything else that you're more frequently used to doing, versus things that are kind of in the illiquid end of the ledger, whereas that transaction comes with some additional risks that you're going to bear yourself as the investor, right? So you're getting in through not an exchange traded means, right? So you're entering into some type of a private transaction with some group or entity. And then to exit that strategy, you need to find a buyer yourself, or rely upon a third party to find a buyer who's interested in buying you out of your portion of that alternative investment, whatever it may be. So there's really two very, very different considerations there. And I think from the exchange traded liquid perspective, I think that's an opportunity for anybody to consider with a portion of their portfolio. And you do still have the opportunity to wrap some of these alternative style investment opportunities inside of that, real estate, precious metals, artwork, even farmland. All of those things can be bought in this kind of easily bought, easily sold vehicle format.
I think when it comes to liquidity, Dan, I think you did a great job. Liquidity is such a complicated scenario because when we work with people, I think that is one of the biggest fears that people have is that second to, having enough income is having enough liquidity. And, when you're embracing an illiquid investment and you're saying, I'm going to buy this, I'm going to be illiquid. And we talked about earlier, like, we trade real estate programs and so forth, and we try to trade them like stocks. And in reality, they're long-term type of programs. I mean, I look at the REIT space, the real estate investment trust space right now traded on the market exchange. There is just so much underwater from what it was even 4, 5, 6 months ago because of interest rates and, fear of renting numbers declining and so forth. But there are inside of these fears opportunities, and there are opportunities to own. And they may be long-term opportunities, but they, the longer the time frame it is, the better opportunity you have for growth. One other thing about the traded space, and even with the untraded space in real estate, if you can actually give a company the amount of time that they need, almost limitless, to invest in real estate and hold on to it, they do pay income. I mean, the income's not guaranteed, but they usually do pay income. And that allows you to kind of just submit to the fact that this income is what I have. I'm happy with this income as long as they're profitable and they can maintain tenancy and so forth. Like any building, if all the tenants move out of the building because there's, bugs in it, you're not going to have any income. So you need to make sure that the company knows how to run real estate and so forth, and that they're diversified as well. But real estate can be a wonderful alternative, especially when the real estate, when the stock market's declining and you're like, I need income. Well, people still rent homes. They still rent business space. There's still opportunities in that. And that's where the discernment of the type of alternative really comes into play. But when it comes to liquidity and understanding that fear, Dan, of where people are placing their money and having liquidity is complicated because I think, unfortunately, most of us are myopic in the concept of each dollar, and we want each dollar to be liquid instead of realizing that out of my total portfolio, this piece might be illiquid, but that doesn't really matter because I have all of this over here that is liquid. Right, Dan? I mean, Seth, how many conversations we had with people that have said, well, this isn't really liquid, or, this doesn't really, what about if I need money? It's like, well, yeah, if you need money, you're not going here first because this is the illiquid one. We go to the one over here that's fully liquid, but they're always looking for liquidity in everything. I mean, what do you guys think?
Yeah, I wanted to say on the liquidity piece that, sometimes liquidity is not your friend. And let's take that real estate.
Say that again, Seth.
Sometimes liquidity is not your friend. Okay. Why? Because here's why. As an investor, you have the tendency, we all do. Okay. I mean, we're all included in this. We're all investors here, but we have to understand the tendency when we're hearing headlines and we're seeing stuff on the market, right? The tendency is to be able to tolerate, that's our risk tolerance, how much that down, market coming down so far, before we're like, I'm out. I can't take it anymore. And then what happens is that you need some time to, like, you go through trauma. Let's just face it, you're going through some trauma when that market tanks and you're looking around and you're scared. It takes time for you to kind of recover what you need in order to take that step into the market again. And usually by that time, statistically, you missed it. Okay. You missed it. That's why you hear people say, stay invested no matter what, buy index funds, just go in and stay in over time. Numbers are going to work. That's a philosophy. Okay. But we have to understand what your ability to withstand risk is. And if you're somebody that basically that scenario happens and you're like, I got to get the money out. Okay. What's going to happen is you're probably going to be, you will become one of the statistics that says you're not earning enough to stay afloat or to keep moving forward with your project, with your plan. And so one of the things that illiquidity can do for you is get you outside of that market fluctuation and get you into a place where that investment vehicle is going to require you to take your hands off the steering wheel and do what you intended it to do. And you're going into this eyes wide open, understanding, okay, I'm going to take my hands off the steering wheel on this one. And I'm going to invest in this alternative over here with the understanding that this is my expectation for it. Of course, I want it to be profitable. I want it to, create income. I want it to do what I want it to do. Okay. But I'm going to give it time. Investing takes time. It's not a set it and forget it, right? We are paying attention to it. And also you're going to have to build a strategy that based off of the numbers and based off the inputs, expecting these outputs, that's not an overnight thing. Okay. And if you are a short-term investor, and there's very much like the day trader mentality, that's one perspective. But overall, you're going to find out that is not going to be a successful experience. And so that's why I say that. So it's not necessarily that the illiquidity it's not a bad thing necessarily, but you also have to be liquid. You can't be completely illiquid and then turn around and say, well, I don't have money because I need the money to do this thing I needed to do over here.
Well, I think people don't even understand liquidity, and sometimes when they embrace illiquidity and don't even quantify it that way. And I think there's only two things you have to offer a financial institution when you're actually doing an investment. One is how much money you have, and two is how much time you can offer, right? So those two things are valuable to investment companies, and I think let's get back to that right after this break.
You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. When we come back, we will be talking more about rise of the alternatives. Don't go anywhere. We'll be right back.
Hello, everyone. This is Dan Mickle on Brashaw Financial Group. Are you looking for professional guidance to kickstart your investing journey? Look no further. Brashaw Financial Advisors are here to help. Our team of experts will provide you personalized advice tailored to your financial goals. Visit us at BrashawFinancial.com today and schedule your free consultation. Brashaw Financial, investing made easy.
You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. And now, more Money on Tap with Ben, Seth, and Dan.
Welcome back to listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. And we are jumping back into rise of the alts. It's been this is a great space. We love it. We don't have a whole lot of time, and we could be here and probably do 5 shows in a row just talking about alternatives and pulling them apart because we love it. But with that, Ben.
Yeah, so what I was saying was that, there's only two things you have to offer an investment company, and that is either the amount of money you have or the time you have. And that's easiestly understood when you think about a CD at the bank, right? The CD at the bank, they want your money for a longer period of time, so they offer you more money for a 5-year than they do a 3-year usually, right? And if you do like over $100,000, they give you a little bit more interest. The same thing kind of exists in that entire alternative space. The more time you give them, the more opportunity you give them to really, allow your investments to bake, to rise up. That's usually where you're going to find the more opportunistic potential in the alt space. But Dan, I'm going to turn this over to you because we have the next area of alts.
Yeah, the kind of the future of the alternative world is one that's growing, and we're seeing that generational shift. We've mentioned that a couple times. When millennials were polled, 72% of them stated this, and 85% of Gen Z said that they intend to have 10 to 20% of their investment portfolio in alternatives going forward, which is a significant increase. And not only is it growing from the investor's perspective, but advisors such as ourselves were also polled, and they see themselves increasing from back in 2021. They were about 10.5% of the portfolios they managed in the alternative space. And by next year, they intend to nearly double that to 17.5%. So the investor and the advisor are seeing themselves similarly looking to have somewhere between 15 and 20% of their portfolios invested in the alternative space, which is, it's a considerable counterbalance to what's going on in the market. But the reason people are pursuing this and what they're thinking about, 41% of them responded it's for long-term growth. So speaking to that liquid concept, and to your point, Ben, about what it is that you have to offer an investment, time and money, people are getting into this space not for the quick buck, but they're getting into it for a long-term hold. And 39% of them responded that they're seeking diversity in the alternative world. So the two reasons you would consider it primarily from our perspective are being met, and investors understand that. One other thing that I think is kind of cool about the alternative space, a lot of people come to us looking for investment advice because they don't understand the stock market, right? They just haven't spent time studying up in that world. But this broadening alternative space, especially with these kind of younger generations, is giving people kind of an exciting opportunity to get invested in what they think they understand, right? They're into the art world, so they found a way to take a hobby or a passion and make it an investment for themselves. Back in 2022, under 25-year-olds spent $3 billion on art, which I think was an incredible statistic when I came across that. You would think of these people not having significant assets, and they spent $3 billion on art. And then you get into the baseball card routine, which all three of us were heavily into and thought of it as an investment and a passion. And, we all did that, right? But then, kids that are into the sneakers these days. So it's an interesting opportunity to take something that you think is your area of expertise and get invested in it in a real way.
Yeah, I got to say, there's the sneaker thing coming back around to that. There are kids, this is when Spencer was in high school, there were kids making more on sneakers than their parents were bringing home in a month. I was just amazed. It blew me away. And I gotta just give you props. I love the hustle, and I love that the opportunity that this generation has to really broaden their investment horizon. But here's the thing, right? Is the kids that are being successful at this, the people that are successful at baseball cards, at any one of these endeavors, right? They're not just throwing money around like, hope and a prayer. There you go. That's not a very successful investment attitude, period. And so I love it when, clients are coming in and they're like, well, this is what I'm doing with my money, right? This is where I'm at. This is where I'm going. I'm buying this, and they wake up and they look at their portfolio that they're trading. But, eventually they get to a place where they're like, okay, I need a big picture because I am so focused on this one thing over here that I've got to bring it together and get it to all, sing the same song, right? We've got different parts of this song and they're just kind of coming in all at different times. And we got to, it's okay. We're going to conduct a little bit here. We're going to practice a little bit here. But where we start's usually a little bit rough. We get it. But eventually we get to this place where everything's just working together. And this is part of the song. This is part of the song that we get to bring it together. I've never used this. Have I ever used this analogy before? I love it.
I think it's a first.
Oh, you're getting laughs.
Well, I think the thing is that, alternatives are, I don't know if kids are just buying sneakers for ridiculous amounts of money because they have spendable cash on some level and they're calling it investing and everyone else wants the sneaker the person has. So therefore it's making itself an alternative. Or if you're really like, I didn't buy baseball cards necessarily just to collect them, though as I got older, I did, right? I saw value in some of the other cards. But when I was a kid, I was just playing around with them and looking at them and they were my heroes. But alternatives are a space that's going to be part of our future in lots of different ways, whether it's digital currency or it's artwork or if it's shoes or if it's real estate. It's part of our future as a world. I think that digital currency, probably the most crazy unknown space of what that's going to be. I'm not ever encouraging people to go buy digital currency because I don't know which one's going to be the one that we all land on, but everyone kind of expects us to. But if you're not engaging in alternative investing or you don't understand it well enough, I think that's where we're saying reach out to us or reach out to somebody who has enough knowledge to help you get there so you can quantify what you're comfortable with, how liquidity or illiquidity plays a part in your future, and how you solve a retirement plan when you're embracing this whole new alternative investment space that is growing, like you pointed out, Dan, leaps and bounds. I mean, it's growing massively. It's almost doubled in the last 10 years as an investment space.
You've been listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. It has been a joy to be here with you guys today and to cover a topic that we love. We love. We'll do this show. We'll do it differently. here in just a little while as well, because there's just so much to talk about inside the space. And if that's you and you like the show or subscribe to the show, please send us a note. We'd love to send you out some Money on Tap gear. And also, love to meet you here this next week, because we've got more for you at Money on Tap. Be successful in your investing, people. We can't wait to be here with you next week.
The views expressed are not necessarily the opinion of this radio station and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. No strategy, product, material, or tool mentioned can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information, products, materials, or tools mentioned should be relied upon when coordinated with individual professional advice. Past performance is not a guarantee of future results. This show may be subsidized in whole or in part by a product sponsor or issuer. Securities and advisory services offered through SagePoint Financial Incorporated, member FINRA SIPC, and a registered investment advisor. All other services offered through Brayshaw Financial Group LLC are independent of SagePoint Financial. SagePoint Financial and Brayshaw Financial Group do not provide tax or legal advice. Main office is located at 116 South River Road, Bedford, New Hampshire, 03110, and can be reached at toll-free 855-226-8551.